Hello to everyone. Today is May the 7th, 2022. We'll do our disclaimer, go over our calls, and then make our predictions, including a more specific update on our longer term, or I should say, for the next few weeks, expectations of what could be a very exciting time. Well, this is my plan for Monday. It's a plan. I can change it. I can be wrong. And just remember, these are treacherous markets, and any trade you make should be at your own risk. No one's going to be right every time, even though I try as hard as I can. Look for the pattern with the early high. This one certainly fits, and Monday's pattern should also have the early high. We had some targets. The ultimate has no time limit. The other target didn't print. I'll have to add it to the list. We have a new target of 41.4478, most likely to print by Monday. That one might not work either, yet. We now, within a relatively short period of time, have a cluster of unfilled targets. This I've seen about once or twice a year, just about every year. System was devised in the summer of 2002, so this is almost 20 years. And about once or twice every year I get a cluster of these targets which don't print. And all I can tell you is in the past we've always retraced, and those targets have printed. Just to put numbers on this is the number of unfilled targets we have, and there just aren't that many instances where you have the number of targets unfilled that we have now. So the odds are overwhelming that sometime we're going to retrace through them. And it might be faster than you think possible. During the day, the only call we got was that this drop wouldn't stick, gives us the new target, 41.4478. We're still just one bar under this TDST line. We're still in what DeMark calls his support area. Now, we did say we looked for a gap and a prompt move outside the day's range. That certainly happened. It was the commonest thing. We also said we should be near a low in terms of time, but not necessarily in terms of price. That's still what I think. Let's get more specific on that. We still have this volume spike. It's not perfect, but in terms of time, it tends to occur within a few days of market lows. We also have extreme sentiment indicators. They're not pinpoint indicators, but they're really seen at times of major lows in the market. This is our long-term count. We have green A, green B, and green C equals green A at 39.09. We come within 1% or so of that, it'll be close enough for me. This pattern goes back to 2009. If you can nail it within 1%, I'd be happy. Going back to my original account, I did have wave gray A ending here. If that's back with gray A, and we made gray B, gray C would equal gray A at 39.33, which is close enough to 39.09, like 24 points or so. It's close enough for me, if that works. Let's focus in on these waves. Now here's what's happened in this tumultuous week. Here was the FOMC announcement. We made what I'm calling A, and if you like Elliott wave, this is about as perfect an ABC C yet to come, as you can never have. If this is A and this is B, which topped out yesterday, inside wave B you have an A, a B, and a C, with C equal to A. You look inside wave gold B, you have magenta A, B, C, with C equal to A. You look inside magenta B, you have a blue A, B, C, with C equal to A. It doesn't get any more perfect than that, and if the perfection continues, you're going to have a wave red A, and they're going to have a wave red C, which is equal to wave red A, and it could be just as fast. What's interesting is that wave red C would equal wave red A at 39.4965, which is awfully close to the target we had of gray C equaled gray A from the last chart at 39.3333. And if this wave down here was dark blue A, and if that was dark blue B, then dark blue C would have a fib relationship to dark blue A at 39.5243, which is the same price. So if that's A, B equals to C there, and then this wave C would have a fib relationship with A. So this is how I had been counting it. We're going to change that. Instead of this 0.786, we're going to count it this way, with the target further down below. So all these numbers form a cluster where a sharp down move Monday could end the decline, complete the pattern, and find major fib support between 39.33 and 39.52. How about the time? Well, time isn't my thing, but there's an important date coming up on May 13th. Lindsay has a low to high pattern with a tolerance of a day. Here's a low, here's a low. High comes on May 13th. There's a Carol Ann spiral calendar date on May 13th. It's F22 from the August 9th, 2011 panic low. He has a tolerance of 3 to 6 days. Now again, my understanding is that the time is more important than the polarity, whether it's a high or a low. But if we do get this impulse down Monday, it would certainly fit if we had a rally into around May 13th, give or take a few days, and we're going to put numbers on the strength of a rally if we get the big drop. Monday's pattern has the early low. It could still gap down. Usually it's a bullish day with a final hour high. Failure is a straight line drop. There's a higher MEJT target. Unless we gap down smartly, the rules call for it to print. We're now in the time period in which a cluster of targets haven't printed within their preferred time frames. This happens about once or twice a year. In the past, the market has retraced, and eventually those numbers did print. There's a wave count which calls for a strong down day Monday. So if that happens, we could have a steep drop similar to that we saw Thursday, bottoming in the middle 3900s. There is wave balance in that area, and if it holds, sentiment indicators allow for a very strong rally into May 13th, give or take 1 to 3 days. The three-leg FOMC whipsaw has played out. It's indicated the next move of significance should be higher because that was the first move. On infrequent occasions, the 3 legs grow into 5. So we could be in the 4th leg now. So if we do drop into the 39.50 area, this would be a 250 point drop under the announcement price, which is just under 4,200. We should then trade over 4,200 by at least that amount. This would imply a rally from the 39.50 area to the 44.50 area in a very short period of time. So if this works, we're going to see that 39.95 target from the March FOMC whipsaw after all. No guarantees on this one, but it's a plausible path. We'll pencil it in. So just because that fits, it doesn't mean something else won't. But there's a real expectation that we have a sharp move Monday down to maybe 39.50, give or take a little, and then a 500 point rally within a very, very, very short period of time. And if it's wrong, you don't have to risk any money on it. But if it's playing out, you shouldn't be surprised if it happens. We'll pencil it in, we'll see if it works, and that's today's call.